Welcome to Money in Motion by Trade the Chain. If you want more from CJ and Monte, subscribe to Trade the Chain and get access to the TTC community Discord, weekly futures reports, AI-driven cryptocurrency sentiment indicators, and other exclusive content. For a 14-day free trial, visit tradethechain.com or visit the link in the video description.
Hello, everyone, and welcome back to another edition of Money in Motion. Today's Wednesday, October 18th. The safe haven assets are up today, being gold, dollar, Swiss franc. Haven't checked silver. Assume it might be up, but anyways. So good to talk about that. Monte's going to talk a little bit about Google. They got earnings today, or it's tomorrow, right? Tomorrow.
I believe it's on Friday. Let me check that. I'll get back.
Tesla's is today, I believe. So that's
going
to be impactful. There's a good amount of earnings this week that should.
Google's is on Tuesday, the 24th. So still a few days left into it, and that's part of the reason why I wanted to talk about it. I guess since you brought it up, let's dive right into it. But first, I do want to say good morning to everyone watching. Good morning, Keith. Good morning, Jenna. Good morning, UIC Now. Hope you guys are all doing well, and everyone else watching. Please don't forget to like and subscribe as well. Really helps out the channel, and we'd appreciate it very much. But anyways, diving into some assets. So this is something that I posted in the Discord community first. They always get first digs at our insights, but Google is a trade that I've liked this week, just leading up into earnings. One thing I always say is that I don't like to bet on the outcome of earnings. I don't want to guess whether or not it's going to be positive or negative. But based on what we're seeing from Google and based on what we're seeing from also, just equities in general, and I'll get to this in a minute, but, overall, this is still a pretty bearish looking formation. I think Google leading into earnings is looking poised to break its 52-week high. We're right at it today. And if that is the case, I expect it to run pretty hard. That's what we saw last time Google broke into a 52-week high, is it really started to run. And I think there's a good possibility that over the next 6 days, we see some positive price action. So with this trade, I like it because, one, we have a defined time horizon being the earnings report on Tuesday, the 24th. So that's where I want to be out before that. And then two, we have defined risk, I would say, below yesterday's, market open scare price of around 138 would be a good place to set your stops. And then an upside target, honestly, I think you could shoot for, the high 140s, 148, 150. In the next, over the next, how many days does it have to do it? It's got today, tomorrow, Friday, and Monday. So 4 more trading days, I think, all of which will be positive, and could drive us up to the 148 range. So that's kind of where I'm at with Google. And I think it's going to be one of the better trades from a risk reward perspective. That being said, it is coming up into that 52-week high where you could either look at it as a level of resistance or a breakout level. I'm seeing it more as a breakout level as we lead into earnings here. So that's what I'm seeing with Google. Like I said, posted that in the Discord last night.
I posted one in the Discord last night.
Yeah,
as well.
Yeah, and you also posted on. I'll let you talk about that, but anyways, that's kind of just based on historically the price action we've seen leading up to earnings, and also the current market conditions. I like the chances of Google having 4 consecutive days of positive price action as it leads up into earnings, and people speculate on that earnings report. Now, what happens after? I don't know. I don't care. I plan to be out on Tuesday, before earnings come out. So that's one trade I'm in, one trade I've shared with the community. But CJ, any thoughts on that?
On Google? Oh
or
man.
just any Q assets in general, or just equity markets, I suppose.
Yeah, I mean, evidently, I guess like gold and Swiss franc have been the best hedges to risk off price action, which is kind of weird because we've thought of those as being risk on assets, but we see them performing as safe haven assets. So it's just like yesterday I was kind of celebrating to myself that having the Dow being up, and I just had this feeling like I'm celebrating way too early. Like this is not probably not as easy as I think it is. Um, and sure enough, yeah, we're down. So I mean, tough to get a feel for equities here. I still lean towards the upside. And you know, that Dow position was still crowded in terms of the shorts. So we'll see if they end up getting squeezed or not, but kind of just gotta observe today. No critical levels have really been hit or anything. Um, and by levels, I mean stuff that would like stop me out.
Yeah,
But anyways, I'll bring up some charts.
go for it.
So we
Man,
talked about
it's just-
we talked about gold squeezing. Earlier last week as like the war started, took some profit up here, and then in the Discord last night, gold was like starting to get bid, and I was watching it in its correlation with some of the other currencies, and it was clearly looking to me like the best hedge to risk off price action at the time, because even though some may treat it as a risk asset in certain instances, this seems like a clear instance where you have kind of a perfect storm where you have a ton of shorts trapped from last week and the downtrend that we saw. And then obviously the geopolitical catalyst, any type of escalation will likely, it's look, at this point, it's resulted in gold getting bid up. And because of those shorts positioned there already, it has just added, fuel to the fire. And we weren't really neutral yet. So that was one thing I posted in Discord last night. I was taking another long re-entering gold. This 822 last night. So it was around actually it was the price entry, I believe, was 19. It was at this recent high, 1945. So we'll see ultimately how that one kind of ends up. But it's really nice to be in an asset where you're actually trading a currency that's going up and the dollar's going up as
yeah,
well. That's very rare. And same, look at the Japanese yen too. Even the yen, like any normal day, if like there wasn't, I would say, geopolitical uncertainty and the dollar was up almost 10 to 20 basis points, yen has, based on its performance over the last year, like it probably would be down at least 20 to 30 basis points on a day like today. I mean, look at like CAD or look at the euro. They're all performing that way, but yen is somewhat positive. And I do not want to trade the yen because everybody knows there's no fundamental reason to hold the yen. But let's not forget that that was a very similar sentiment around the Swiss franc in 2015. Once they intervened and actually signaled to the market and had a currency intervention, 16 to 20% upswing in the next day, flushing out tons and tons of shorts. We talked about that earlier in the week. I think something like that is inevitable in this Japanese yen trade. There's just so many funds putting on this carry trade, and it'll happen eventually. The Bank of Japan will bring it into alignment eventually, but the timing is just awful. Like, who knows? Kind of went on a tangent there.
no, it's a good one though. I mean, I'm sure there's people that were wondering about the yen, but okay, you want to talk about heating oil? I thought you were about to go on to the Swiss franc.
I mean, what's to say about the Swiss franc? It's going up still. I don't want to jinx it, so I'm not even going to bring it up. Yeah, what do you think about this? I mean, you think this is a decent area where we could get potentially a second chance short on the energy market, but most notably in heating oil here?
Yeah, most definitely. I mean, you could cover up the name of the chart, or the name of like the asset, and just give me this as a blind chart, and I would say, shorting it would be the play. We have a higher low. You have clearly defined risk being that higher low. And then also you have a downside target where we dipped, you know, or you could, just plausibly, write it down below, that $2.90 or like $2.80 level where we found some support. Maybe take off a third if we reach that level. I don't think that's a horrible idea.
This
But
level you're talking about?
yeah, like a little
Yeah.
bit lower than that, just like, at the lows. Yeah, right there. Maybe consider taking a third off there. You can always add back, but overall, and now that you like I said, if this is just a blind chart, that would be my analysis. But also knowing that it's heating oil, I think that this is exactly what you said it is, a second chance opportunity, get in on this short trade for those that missed it up there at the $3.30 to $3.50 level, which would be, I'm included in that. I look to enter heating oil based on some of your analysis, but I never really got the chance. But I think today actually is looking like a favorable day for re-entry. But what are your thoughts on it?
Yeah. I think I might I probably will let this one go by. Just because we have seen a little bit of covering. I still am bearish on this. I think this probably falls, let's see, on a percentage basis. I still think this is going to fall around 20% over the next 3 months to 4 months. But I haven't entered it right now, kind of just sticking with the positions that are working for the time being. But this is definitely one that I think if we continue to see like just resistance and failure and weakness at this level, then I think that heating oil and crude oil will go down a lot. The thing that's kind of making me a bit hesitant here is you're still seeing a little bit of the war bid come in on things like heating oil. Like when we did have the initial reaction to breakout of war, we saw 5% jumps in both crude oil and heating oil. So that's a bit concerning. But if we see this like weakness within price action, I do think based on the positioning as well as perhaps some of the fundamentals, you could see like a 10 to 20% correction within heating oil over like the next 3 to 4 months. That's typically how these kind of like mean reversion type actions go within the energy market. If you look at some of the historic spikes in asset values.
Yeah, most definitely. I see we get a question from Mike. Buying ETH here. That's a good question and a good segue into the realm of crypto. I did have some. Go ahead.
I just was gonna say I think it looks like a decent time to take a shot on ETH BTC. I don't know. I just feel like crypto, you're walking on glass right now.
Yeah, and let me just say, I was laying in bed last night thinking about this, and that's a sad thing to admit. I don't know why I just said that, but I was laying there late at night thinking about ETH and the ETH BTC chart, and how I've been trading ETH BTC, and it just hasn't been working. The Bitcoin, and the reason why it hasn't worked is because of the ETF narrative pumping Bitcoin and having it significantly overperform. So I think if you want exposure to ETH, the best way to get it is just via the ETH USD pair. So I'm kind of flipping from saying that ETH BTC is the way to go to now saying that ETH USD is the way to go. And there's a couple reasons why I think that. One, you have defined risk, being here at this level of about 1535. Anything below that, cut it. You don't want to catch that falling knife. But also you have good upside target being the 200-day moving average, because it's not that often that Bitcoin and ETH remain that diverged for that long. And that's a pretty massive divergence. So you could see ETH plausibly play a game of catch up. We've seen it many, many times where ETH lags behind only to, rapidly catch up. It could be over the weekend when markets are closed and there's, a kind of inefficiency gap, and we see ETH spike up to 1750. Overall, I really like the a spot buy of ETH here, or even just a small levered position and riding it up to around 1750. That's where I'd probably cut it. But the reason why I wouldn't trade ETH BTC right now is because of the looming narrative of the ETF approval. I said it yesterday, and I still think it's true. Bitcoin will lead the rally for all of the altcoins. It will be Bitcoin first. We've talked about this flow of capital, right? Where Bitcoin leads the charge, and then it kind of trickles down into ETH and the rest of the altcoins. I think that we're going to see ETH play a bit of catch up here, catch up to where Bitcoin's at in terms of its relation to the moving average. But the reason why I don't want to trade ETH BTC is one positive news piece or one tweet from a Cointelegraph intern, and that trade is blown up because Bitcoin spikes, 10% while ETH doesn't do anything. So with that narrative looming overhead, I think the best exposure to ETH is just ETH USD rather than going with ETH BTC. So a little bit of a change of my planning there, but I think there's good reasoning behind it. So
I will say a lot of negativity I've seen on Twitter. I think, do you remember from the 2017 cycle, the guy who used to go by the name Crypto Bobby? Rob Pavlone. He's actually a good guy. Like, he used to, at least I would assume, I don't know anything about him personally, but he seems like a pretty good guy. He never has like shilled anything. He has always had a job working at like Oracle or something, but he's just been like tweeting about Bitcoin over the years and has gained somewhat of a following. Anyways, you're looking at me like I have three eyes or something. But
I'm just wondering where you're going with this.
I was just going to say, I like him. I wouldn't consider him necessarily to be a fade, but he's just like, he tweeted something today about Bitcoin being up only and Ethereum being down only. And it got a ton of views and a ton of likes. So I'm not like making fun of him or saying he's an idiot or anything. I'm just saying that observation and the fact that it's garnering so much attention is a reflection of probably all the ETH BTC traders who are just as frustrated as you are.
Yeah. There's a lot of people. I think there's a lot of people still stuck in that trade, that synthetic ETH BTC position where, they want to see ETH bounce back relative to BTC, and it very well might, But the thing is, I don't want to take a trade where just one simple tweet saying the BlackRock iShares ETF has been approved. Boom, your trade's blown up, and ETH BTC plummets. So for me, the remote event risk is too imminent, and
that's like the best case scenario for a remote event risk.
It usually you have to, when you're talking about black swans, it's like they're called black swans because you can't predict them, right? But this is something that is looming overhead and feels like it's so close to happening, and just like a single tweet could drive Bitcoin up significantly and ruin that ETH BTC trade. I think you're better served just trading ETH USD.
Yeah, shorting crypto is awful. Look, I'm not going to speak to the altcoins because it seems like they can't do anything other than just go down these days or just bleed against Bitcoin. But what I will say is that if the short Bitcoin trade or the short ETH trade makes no sense to me right here, because it's if you're going to be long, this is the exact same thing as the British pound trade in 1992 that Soros did. It's not as if he knew that he had an inkling that something was going to happen and that the situation with the Bank of England was untenable. But ultimately, the reason why he bet so large and sized that trade to the point where he could make $1 billion in a day was because he said, look, it's not going to break to the upside. How much do I have to really lose on this? A couple percent, but we can make 20% if they actually leave the ERM. This is a huge asymmetric opportunity. And I see the same thing happening with Bitcoin and crypto this week. It's if you're going to be short, there's no point to me, because like you might as well just be long, even if there's only a 5 to 10% chance of the ETF being approved this week or next week. Like, what are you really gonna like? What is the risk to the downside in the meantime? Like 2 to 3 to 5%. That's nothing compared to potentially a 20% or like a 30% increase if the ETF is actually approved. So I think you have to consider what is the risk adjusted return for that particular trade and what is our potential downside here. I mean, does that have you had similar thoughts thinking about this situation this week?
Yeah, that's like exactly what I was thinking about last night is, exactly that scenario. And yeah, I don't know. For me right now, I think the best way to play it, like Bitcoin, it made that move. Now it's kind of stuck in a rut. But I do think ETH plays catch up. So, that's just the only thing that to me seems like imminent and obvious. But other than that, I think if you're trying to short crypto right now, you're making a big mistake, and it will more than likely come back to bite you because, like we said, Bitcoin will likely consolidate above the 200-day moving average for a period of time, and then we'll get the positive news, and then price will spike. That's just the way Bitcoin moves, and yeah. I think that, we're due for a few days of consolidation above the 200-day moving average. And then we see, Bitcoin really start to take off. So.
Yeah, seems pretty asymmetric at the current point. Didn't know you were in the Discord. Maybe you are in there under a different name, but would love to hear from you. Always enjoy the participation and really appreciate the comments from you guys here on a daily basis. It's I don't want to get into this too much, but like I care about you guys, like if I put out a trade and it's like, it loses, I'm thinking, oh my God, like these people followed me into this. Like I don't, so hopefully I'm hoping you guys makes a difference and helps you guys. That's the whole point of why we do this and why we try to, share ideas and stuff, and the idea of community. Because like, let's face it, if you don't work at like a fund or you don't go into an office every day, like trading can be very isolating thing. But to have that group of community or to have kind of people to bounce off ideas, I think is pretty valuable and important. I mean, I've benefited from it too.
Oh yeah, 100%. 100%.
Well, Chris, good morning.
Yeah.
Just wanted to highlight some more participation. Monte trades what I'm doing. I'm long in both.
Nice. Well, good to have Chris in my corner as always.
Well, not as always. Only sometimes.
I mean,
maybe
at the very least,
trade,
he provides some comedic relief.
Well, we need it. We need it this week and last week. So,
yeah. But I think that's all we got for today. CJ, anything else you'd like to add before we wrap things up?
Just really appreciate the participation. Love when you guys join and share your trades and how things are going. So please, love that feedback. Really grateful for it and appreciate it. And yeah, we'll be back here same time tomorrow. But yeah, we'll see you then. And until then, take care.
Thank you for watching Money in Motion. If you want more from Monte and CJ, subscribe to Trade the Chain and get access to the TTC community Discord, weekly futures reports, AI-driven cryptocurrency sentiment indicators, and other exclusive content. For a 14-day free trial, visit tradethechain.com or visit the link in the video description. Thank you, everyone.